Good morning, everybody. Welcome to another Daily Mark Report brought to you by Mike Bjork. Today is Thursday, April 30th. Hope you guys are having a great morning. We're going to jump right into it today because we do got a lot of economic data to kind of go over. So uh, let's jump into it. We have, of course, every Thursday we get the weekly jobless claims or initial jobless claims. These reports are for the previous week's numbers here. These are people applying for first-time unemployment benefits. And the previous week, last week's report, which would be the previous week, came in at 4.44 million. Now, this was actually revised higher by 15,000 people here. So, a little bit of but again, we still have to watch these numbers here. Now, forecast was calling for 3.5 million, but it exceeded that at 3.84 million. So this is going to probably look at approximately right around the 17% unemployment rate is the numbers we're kind of starting to see, some estimates that are out there. And we'll probably get that next Friday. The Bureau of Labor Statistics will release their job numbers for the month of March, or I'm sorry, month of April. So we may want to brace ourselves for a pretty big number there, and that's probably going to be right in the range of what they're saying is approximately around 17%. So with that in mind, hopefully we'll get more people back to work now that some parts of the economy are growing, or some parts of the economy are reopening. So hopefully we can get that going as well. Let's move along here. We got the employment cost index, which went up a bit. So the previous quarter, the fourth quarter, it was at 0.7%. Forecast for the first quarter was at 0.6% and it went up 0.8%. Now we also got personal income for the month of March. So as you can see, you can imagine with the drop of all these people getting laid off and everything else, and with the coronavirus pandemic coming in, we're going to have a major drop off. We'll start seeing that. So we had a 0.6% increase of personal income for the month of February, which is fantastic. However, when the pandemic hit us, we had a pretty big drop. The forecast come for 1.5% and actually dropped further down 2% of personal income. This is where people are going on furlough, people going pay cuts to keep working, to people getting laid off. So these are different factors that we're starting to see here. Consumer spending, of course, people getting quarantined, they're going to have a major effect on things. This is where the economy is going, having a lot of problems. So we had a 0.2% increase in consumer spending in the month of February. However, forecasts come for a drop of 6.9% and a drop further down to 7.5% for the month of March. Obviously, we'll see much greater numbers on these in coming April's numbers. Now, here's the Fed's inflation numbers. They like the personal consumption expenditure, also known as the PCE. This is the headline number, which grew at 0.1%. Forecasts come for 0.3% drop, and it did come in rate expectation of a 0.3% drop. Now, this had a pretty big drop here on the year over year. The year over year went from 1.8% down to 1.3%. And a lot of this has to do with oil, the price of oil dropping dramatically. So that was, speaking of such, this is what gives us the core PC. If we remove food and energy, which are two variables we have no control over, this is really what the Fed looks at. The core inflation, or core PCE, is their favorite gauge for inflation. So based on that information, we had a 0.2% increase in March, and for the month of, I'm sorry, in February. In March, it went up 0.1%, and forecast called for came in at 0.1%. Its year over year dropped from 1.8 down to 1.7%. Now, again, that dropped, but we'll probably see that most likely in continue to drop even further as we have less pressure, inflationary pressures against us, costs being applied for the month of April. So I would expect that to come down even further. The Fed's gauge, they want a target rate of about 2%. So we're below that number here, which is why the drop in interest rates is what's going to try to stimulate that a little bit. Now, Chicago PMI, this is manufacturing in the Chicago region. Anything below 50, as you can see here in March, we went below that and contracted. Is considered contraction. Anything above that is where we started getting optimism and expansion. And we were at 47.8 in March, and it dropped down to 35.4 in April. This is kind of in line with what we saw in New York and Philadelphia earlier, about a week or two ago. Also dropped in the 30s as well. Let's jump ahead here, see what the headline news shows us. Stocks are down this morning. It's basically taking into consideration what the jobs numbers we saw today. That's kind of what's dragging it down for the most part. ECB had their, like yesterday, we had the Fed wrap up their two-day meeting. ECB wrapped up their meeting, kept their interest rate intact, but also kind of similar to like our Fed, basically reiterated that they're willing to help out any way they can to kind of stimulate the economies and keep the economies floating as best they can, and that they basically have given their full support. So, of course, markets like that, but however, uh, you know, take it for a grain of salt in the sense that excuse me, that the government's obviously it's an infection, so we're trying to get this coronavirus intact, so that way we can get back to work, get back to our normal lives, and not have any more of these disruptions. Let's kind of jump ahead here, see how this is playing out in the bond market. Bond market is about the same. We did close off the earlier high yesterday, so we're up about 9 basis points. This puts us in the same kind of range where we are about the same time yesterday. So pricing will remain unchanged. Mortgage rates remain unchanged so far today. And as you can see here, the 25-day moving average continues to climb up, which will keep pushing mortgage bonds up even higher. The Fed is still purchasing at a modest pace here, which is kind of helping lenders out as well as keeping this stabilized, which is good for everybody involved here. Yields are slightly down, but still in the same range. We're about 0.59 right now, so not a big change there or not. All right, so that's about the same again. Mortgage rates remain unchanged from yesterday's pricing. If you guys are in California, please reach out. I'd love to talk to you guys, see what opportunities we can help you guys out with. You can direct message me or email me. I even put in the description if you want to just get started, you can get in there, start working on a loan application, and upload documents as well if you wish, and we can discuss what your scenario is. We are starting to see a bit more. Some more changes are coming into effect with mortgages without cash out refinances because the servicing are taking such a hit right now, and the FHFA's lack of response or assistance. They are now cash out refinances because a lot of people simply are not going to do them. They're pricing them way out of the market just because they are a higher risk type of loan for them. So cash out refinances will have a huge price adjustment, basically putting lenders out of any market to go ahead and do those loans. So there's many more. There's few that are not. Don't get me wrong that there aren't. This isn't out there, but there are, for the most part, a lot of people are going to be pricing these back into the loan, passed on to the consumer because of FHFA's lack of assistance in helping the servicers as they are bleeding due to the huge amount of forbearance, which is exceeding even their very modest expectations. They are expecting about 1 million people, and it's over 3 million now claiming for forbearance. So this is there's a huge amount of people not making payments, and the servicers making their payments onto the investor are bleeding them dry. And again, unfortunately, FHFA's lack of assistance is what's going to kind of help hurt the consumer as well as the lenders. All right, so basically, we are all in this together. You guys have a great rest of your day. Sorry if I rambled on a little bit today, but just want to pass that information along to you guys. You guys have a great rest of your day, and we'll see you in tomorrow's video. Thanks for watching. Bye-bye.